Hello, and thank you for joining us. My name is Joe Militello, and today I want to talk to you about our Savvy Business Plan for our business owners. And this plan helps our business owners drastically reduce annual tax obligations, create more company liquidity, and also create a tax-free retirement using pre-taxed dollars. Now, our tax efficiency plan has unprecedented benefits for all business owners of all types, and we were able to structure this plan through ERISA legislation and IRS tax codes. Problem a lot of business owners have is their current advisors are not often aware of this type of a strategy because it is a very strategic strategy, and it's a combination of ERISA tax law, IRS code, and also a financial service product. And those three components bring it all together. So in most cases, a traditional advisor is not aware of this type of plan unless he actually has the resources to put that together. Now, this plan also benefits all the pass-through corporations, S-corps, sole proprietorships, professional corporations, LLCs, LLPs, partnerships, and on. This is a quick overview of the components that come together to build our tax plan through ERISA law and tax code. And we're not going to go through those individually. It's just a highlight of them. That's something we can review at a later time. Current contribution plans with any type of tax benefit are typically a qualified plan: 401k, SEP, IRAs, 403bs, and the like. And some of the problems that we run into for that is top-heavy testing, limited contributions, limited access to the funds. You can't gain access to your capital. And a lot of these plans have limitations to the employers, and they really or mainly only benefit some of the employees. So what we focus on is a plan that's going to be able to assist a business owner to overcome these objections and the issues that stand in their way, such as not being able to access the money until you're 59 and a half, the limited contributions, the limited liquidity, mandatory distribution at age 70 and a half. A lot of my business owners do not need to access that money by that age. And if you do access that money, you're usually under strict scrutiny and fines, and you're going to pay those heavy fines and taxes. And that's a huge problem for a lot of business owners that I meet with. The answer is our tax efficiency plan, and it's a financial structure that uses an administrative service corporation. It has tax-exempt employee stock ownership trust as one of the components. It's what we call an ESOT. And an ESOT was congressionally approved in 1997, and we were able to apply an ESOT to our business plan for the smaller pass-through corporations. Implementing ERISA tax law and other tax code provisions allows that creation to come together. And this is a quick example of the actual business plan itself. Now, you've got your existing operating company, and your operating company creates profits, of course, and those profits means you have to pay taxes. Well, part of the business plan is through ERISA, we're allowed to utilize or create an administrative service company, which is going to take on a managerial role of the operating company. They're going to handle some of the business that is typically handled through the existing company. And what ERISA allows us to do, or the business owner to do, I should say, is transfer up to 30.2% of your gross operating profit to your administrative service company, which is going to reduce your tax burden on the existing operating company. Now, as part of the plan to complete the full business plan and utilize that ESOT that I spoke of, the employee stock ownership trust, the administrative service company is broken down into shares, which are then sold off to the ESOT company. Now, I just want to make everyone known to this fact that there's no controlling interest over the administrative service company. The existing operating company is owned by the owner. The administrative service company is also owned by the owner, and the ESOT has a trustee, and that is the owner of the operating company. So everything stays in-house, nothing ever leaves, and no one has any controlling interest. But the profits that are transferred to the ESOT company are tax deferred, okay? And the administrative service company does have capital, but it's being removed as part of the plan, okay? And that's what it looks like right here. The administrative service company operating under that pre-tax basis. pre-tax. So everything coming in the door is pre-taxed, and it's going to be withdrawn out of there tax-free. And it's utilized inside of a high cash value, tax-favored 770 accounts. These accounts have tax favorable attributes per the IRS, and it's regulated by IRS code 7702. Okay, we're able to transfer those profits or tax burden that you would be normally paying, and it's going to be pulled out into this tax favored 770 account, again, which is owned by the owner of the existing operating company. So they're in full control of all the money. And what happens is the administrative service company basically becomes a line item deduction, drastically reducing your annual tax obligation, therefore reducing what you're paying. But the other portion that we're transferring to the administrative service company is actually coming out of the ASC and going into the 770 accounts. And that's where it's going to stay to be used for company liquidity and also create a tax-free retirement for the business owner. And I'm going to talk about that in just a minute. High cash value 770 account, as I mentioned, is regulated by our IRS section 7702, which covers the liquidity and the loans. You can also access this capital. You can use this money at any time to purchase out a competitor, to buy another business, to purchase equipment. You can buy real estate and or investments. You can even buy out a partner. Plus, it provides substantial key man and buy-sell benefits. And there's also a substantial increase to the retirement income, as I mentioned. So, folks, let's assume you're paying $300,000 a year in your annual tax base, and now we can reduce that by 50% or more. That's going to be withdrawn from the company and put into your tax favorable 770 accounts. That's the owner's money, and it's going to stay there strictly for the use of the owner. Some additional benefits that we have is asset protection, and also we have a succession plan. Now, the asset protection is good because these accounts they're lawsuit and judgment proof. And this is perfect for a business owner. If anyone is going to suffer any type of a lawsuit, it would be a business owner. And law does not allow these accounts to be tapped into or to be liquidated as part of a lawsuit. Now, the succession plan, of course, is going to help you create that exit strategy from the business. You know, a lot of business owners anticipate or have plans on using that business as their retirement funds, but sometimes it just doesn't work out that way. Either the company didn't perform as expected, economy changes. There's so many different things that can come into the picture to disrupt that actual exit strategy. So the part of the exit strategy we work in with our succession plan is tax-free retirement for that business owner. And we always want to include any and all of your advisors, okay? We bring in our attorneys. We have our ERISA tax attorneys. You can bring in all your advisors, and we have the financial products in order to complete that, those three major components. But we invite any and all of your advisors to come and be a part of the actual process. We actually want them involved. They've already got intimate knowledge of your business in the background, and it's much easier to streamline the actual tax plan or the business strategy when we have your advisors involved. So it is an actual team approach. Excuse me. We're going to go over a couple quick case studies. I just want to point these out to give you an idea of the results of these tax efficiency plans. First off is a doctor. Now, I just want to mention these are actual clients of ours. We're not putting their names in there, but we do have clientele that you can speak to that actually utilize this type of a tax strategy plan. The first one would be a doctor, 53 years of age, and the gross operating income on his business was $1,650,000 per year. His annual tax obligation was about $250,000, and we were able, through our business structure, save him $100,000 a year in tax savings. Now, this particular doctor was closer. He wanted to retire closer to 60. So he was looking at a 5-year plan. So basically, at the end of that 5 years, he was able to put away an additional $500,000 absolutely tax-free in his retirement funds to do with what he wishes at any given time. Now, that doesn't even take into account the growth on these 770 accounts. They're very significant. The reality of that $500,000 would be more like 550, even closer to 600,000. So how is that for a change in a retirement plan? It's pretty positive, I have to say. Case study number two, aged doctor is 38. Now, of course, this doctor is much younger, so he's going to be working for quite a few years. His business had a gross operating income of $2 million per year, and his tax burden was a little over $300,000. Well, with him, we were able to save him almost $200,000 a year in tax savings. And what that's going to do for him specifically is create an additional $300,000 per year in tax-free retirement income at age 66. He planned on working all the way to 65. So this was his goal. See, this is the predictability that we can build in with these plans. Case study number three is a company that we had out of Sarasota, Florida, and their tax burden was in excess of $400,000 a year. We were able to save them $200,000 per year in tax savings, and that money recaptured is going to create an additional $400,000 a year in tax-free retirement income for the partners. There was a couple of partners involved in that one. Leveraging our tax efficiency plan may result in one of the most important decisions you ever make for your business. Reduce taxes, create company liquidity, and create that succession plan for yourself. Each business is different. Of course, we approach each business with a very specific, customized plan. We custom design each plan for every business owner. We have a few questionnaires that we ask you to fill out, and we will prepare a preliminary viable tax efficiency plan summary for you to give you an idea of exactly what we can build. Now, you're probably saying, okay, what's the next step to get involved, right? Well, in order to determine if your company can qualify for our tax efficiency plan, we suggest just getting in touch with us. And we have a no obligation consultation, of course, doesn't cost you a dime. Give us a call. You can even send us an email. The number's right on the screen. Direct office line is 586-200-1033, or you can email us directly at info@infinitewealthinc, that's inc.com, info@infinitewealthinc.com. And we'll be glad to spend some time with you on the phone or by email or both, and get a little preliminary information up front, and then set up an appointment to get together, whether it's in person or maybe even on the computer. Either way, we can do webinars, things of that type. But this is going to start the process, and we will be able to qualify you and your company to determine if you're a fit for our tax efficiency plan. And then we can move forward at that point. Folks, if you have any questions whatsoever, do not hesitate to call us. We're always there to help. Thanks for watching.